right, there's been some big news for Intel stock investors that I'm going to discuss in this video, including the firing of the CEO, Pat Gelsinger, and the search for a new CEO, and latest developments today announced by Bloomberg, which says that the newer management team will consider splitting up the company, the manufacturing side of the business and the design side of the business, something the former CEO seemed to be against. So I'll talk about those issues as well as Intel's latest struggles and update my recommendation for Intel stock. Let you know if I still think it's a buy. It's been one of my worst recommendations this year. It's down significantly and I've had it rated as a buy. So I'll let you know if I'm changing that because of these changes. So let's take a look.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Intel's CFO, David Zinsler, said that the formal separation of the company's factory and product development division is an open question that will be decided by the next leader. So the fact that it's even an open question is a shift from prior management where they were not even discussing this. This was not an option. They had reportedly pushed back against acquisition efforts, pushed back against people trying to buy parts of its business. And so maybe internally there was a bit of a split between what the CEO was thinking, the former CEO, and what other senior leadership members were thinking. And that could have caused this rift between management. To the former CEO's credit, coming in, he informed the board of directors and said that he wanted to undertake this big change in the company's operations. And he said, if you're going to pick me for the CEO, when they picked him several years ago, you've got to be okay with this strategy. And so they gave him the green light to undertake this huge shift in the company's business, make massive capital investments in the company's operations. You can see here capital expenditures on a trailing 12-month period. Since the Pat Gelsinger took on the role of CEO, look how much the increase in CapEx, up near $30 billion in a trailing 12-month period, and it remained high for several years, over $20 billion spending on building and expanding the manufacturing capacity for the business. And this came all while the company's trailing 12-month revenue was declining. And the cash flow from operations were also declining. So you have all of this increase in capital expenditures at a time when the business is going through a decrease, a time of losing market share, cyclical downturn, all of the above, and you're spending all this money to try and turn things around. It was a very risky strategy, and it looks like the board of directors had seen the progress and did not like where it was heading and said enough was enough and gave the CEO an option to retire early. And so here we are today with the company trying to recover. So Zinsler is serving as the co-chief executive officer following this month's ouster of Pat Gelsinger, the former CEO. So now they have co-CEO Michelle Johnston and Zinsler running the corporation. And when you have a big change like this at CEO abruptly, when you don't even have a replacement ready, it just goes to show how much they disagreed with the former CEO's strategy and the path forward. Usually, large corporations like Intel have succession plans, and these searches for CEOs take time, and they have a new person in place ready to take over to have a seamless transition. This abrupt change was certainly bad news. However, investors may have been a little bit excited about it because investors did not like the former CEO's strategy. Investors were not happy with this strategy, and you can tell investors are not happy with this strategy by looking at the company's stock price. This is investors voting on the company's leadership, on the company's prospects. When a stock price is falling as much as Intel stock price has fallen, that's investors saying, you know what, we want to take money away from you and give it to another company because we think another company is going to do better over the next few years than you're going to do. We're not trusting your company with these funds. And so investors have not been happy with Intel. However, the initial reaction to the change in leadership was slightly positive. So, because of those disappointments, there's speculation that the next CEO will make dramatic changes, and that includes talk of a split of the company's manufacturing and product design operations. Most semiconductor companies are either design companies or manufacturing companies. You have very few that are design and manufacturing, Intel being one of them. And so a lot of investors are saying clearly this business model does not work. You've got to be one or the other. You can't be both. And that's been the encouragement from the investor community is for Intel to sell its manufacturing side of the business. Now, I've been, speculating that, Taiwan Semiconductor might be interested in buying Intel's manufacturing business because Taiwan Semiconductor is having trouble keeping up with demand. Demand for its services are soaring, and it's trying to diversify outside of Taiwan. And so it's an opportunity here. It seems like a match that's timed perfectly for Intel to sell its manufacturing assets to Taiwan Semiconductor, and that will solve two problems. For Intel, it'll solve the problem of having both sides of the business, one side being extremely capital intensive. You saw the numbers of how much capital needed to go in there. And so that'll remove that. It'll inject tens of billions of dollars, maybe even approaching $100 billion for Intel's, well, 100 billion might be stretching it, but tens of billions of dollars to be sure for Intel's manufacturing assets. And it'll solve a problem for Taiwan Semiconductor in that it'll diversify its supply chain outside of Taiwan, and it'll increase its capacity in a time when demand is soaring for its services. So far, though, talks of a sale are speculation. The probability of the impact, the probability of a sale have increased with the change of leadership, but it still remains to be seen. Nevertheless, I still think Intel stock is a buy. I'll update that recommendation today. It's a very risky investment, as you've seen, but the long-term potential semiconductor demand for chips manufacturing and design is soaring. So it's in a great business. It has the assets to turn things around. It just needs to figure out how to do it, which is the missing piece. Will the next leadership team be able to do that? That's the big risk. That's the big question mark. But in any investment, it's risk versus reward. And the cheaper valuation makes it an attractive option for long-term investors. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.